Alright boys, good morning. Today is Wednesday and we are doing our chart breakdown. So we are still running in this goal position I was mentioning. Position which I broke down yesterday in yesterday's late chart breakdown, and the fact that price had entered in the pre-FOMC consolidation period, it's undeniable, right? As you can see, we have multiple small 1 hour candlesticks, right? Pretty much accumulation ranging zone before the data release, which happens late New York session at 9 p.m. And so we are expecting price to, after consolidating for several hours, grab all of that liquidity, potentially having a spike to the upside before having the strong downwards flash caused by the data release, right? Yet we are simply holding this trade. We'll see if our stop loss covers the potential liquidity grab. If not, we simply log, we learn, and we move on, right? I'm really not trying to dump out this position. It's a valid position. It's just that we are very much expecting a liquidity grab prior to having the data release. We'll see how that ends up looking. Yet on the other side, we are very much preparing shorts on AUD USD. This is actually our top pair for the day. Beautiful price action, and the fundamentals, as I said, support our narrative. Just a second, I'll be back. Cool, so pretty much the same concept applies. We are very much expecting a liquidity grab before the potential high probability downwards move, right? And so we will simply wait for the liquidity to be swept, plus a proper indication, the proper rejection on our AY, on our area of interest, before potentially taking shorts on AUD USD. As you can see right now, price is rejecting the neckline of that reverse head and shoulders, slowly grinding its way to the upside, potentially grabbing liquidity above those highs, right? That's where a lot of liquidity lies. Above these highs, above this AOI, we have a lot of liquidity on these levels right here, and so we are anticipating price to come up, sweep all of that liquidity before potentially having its downwards move, right? So that is the higher probability scenario, and we are simply waiting for the liquidity to be swept plus our entry signal to be interested in taking shorts. It's that simple. But we are waiting, right? That's 90% of the job of a trader. Waiting, just patiently waiting for the high probability setup to align. At first, when you start out this journey, you will feel the need to get involved, right? You will constantly take trades which are really not meant to be taken, right? You have to wait for the liquidity to be swept first of all, and then for the real direction to be established, for the real momentum to be confirmed. That's when you want to execute your trade, right? So patiently wait, patiently observe, patiently learn, be consistent, and you'll eventually reach profitability, right? So price had now shifted structure to bullish on the 15-minute time frame, as I said, starting its move to the upside, grabbing liquidity from above all of those highs before a potential downwards flush, right? Since the data release is late New York, in case we have our entry signal being provided during the early New York session, we might actually take it, right? Because oftentimes we have accumulation, right? Strong accumulation move prior to having such a strong data release, and then a few hours prior to having the new stop in, we have actually the moves starting to happen, right? Institutional blocks position themselves prior to having the news stopping, right? And so those institutional blocks gently start moving price in that specific direction, right? And so in case we have our entry signal, everything aligned beautifully prior to having the news stopping, we will simply execute on the trade, right? Cool. So that's AUD USD. As far as confluences go, we have this beautiful head and shoulders pattern. There is a definition of a head and shoulders pattern. Now the strategy, my edge at its core, very much implies such patterns, especially on the higher time frames. Previous structure rejections, candlestick rejections, very simple, straightforward technical advantage, right? But that alone will done not do the work, right? Simple patterns, simple structure points, simple support and resistance levels, that alone will simply not be effective, especially in the future markets, because AI will come in the game, and AI will spot such patterns within seconds, right? Meaning that everybody who has access to such tools, which will be the majority of the traders, because otherwise you'll simply get outcompeted by the ones who do use AI tools, will have access to such information. So information is abundant, right? There is no longer a problem of scarcity in regards of information. News feeds as well, a lot of tools that the retail traders will simply have to use to not get outcompeted, right? To stay relevant within the markets. And so simple patterns are simply not the way to go, right? And so we are learning about all of this stuff. We are learning about liquidity. We are learning about environment. We are learning about regimes. We are learning about fundamentals. You gotta create a more advanced edge, right? Not necessarily complex, right? But just constantly adapt, right? Constantly adapt. Trade, log, learn, move on, right? It's about learning, acting, observing, reflecting, improving, and then repeating, right? You gotta do that to and that applies once again in the markets, in business, in life. Learn, act, observe, reflect, improve, repeat, right? That's the cycle you gotta be following. And so here we have this beautiful head and shoulders pattern. Weekly time frame is also bearish, not quite visible, but price had broken below the higher low right there, also forming a head and shoulders pattern on the weekly time frame. We have this massive bearish engulfing, conforming the pattern. Then the daily time frame, as I said, had formed this very beautiful head and shoulders pattern, lower low, lower high, rejection. Yesterday had closed as a doji with a big lower wick, looking perfect for a fill-in, rejecting our AOI. The 4-hour time frame is actually bullish as of right now, but as I said, we might have the strong liquidity grab potentially shifting structure to bullish before the strong flush potentially shifting structure to bearish. You notice the word potentially repeating itself, right? And that's adding in the probabilistic aspect of trading, right? You cannot say for sure this will for sure happen. Price will go up, grab liquidity before shifting structure for sure. There's no for sure in trading, right? You must accept that uncertainty is part of the game. Constant uncertainty is the game, right? You must learn to act decisively in a very uncertain environment, right? And so we are talking in probabilities. That's why I'm saying probably, most likely. These are words I'm repeatedly use throughout the chart breakdowns I do. Yeah, and even though it's an uncertain environment, upon developing a system which has high expectancy of, I mean, you have a certified, let's say, win rate, I mean, over a bigger echelon of trades, you are profitable. Long story short, right? That's the point. Over a bigger echelon of trades, right? The outcome of a single trade is completely random, right? You might say, bro, that's casino. Could be, but you are the casino itself. You are the house, right? The casino themselves, right? The outcome of a probabilist, I mean, the outcome of a, let's say, slot machine is completely random, right? The casinos don't know when the slot machine will pay the one who's engaged in the game. Get the point? Or roulette, right? They do not know when the customer will get the jackpot, right? It's a random outcome, but because they have an edge, because their machines are designed in such a way so that they have a fixed percentage return after a longer period of time, they are simply profitable, right? There are billions of dollars being poured in casinos which have the outcome of a single game completely random, but the outcome over a bigger echelon of games, right? And we are including all of them: slot machines, blackjack, poker. Poker is a bit of a different game, but still blackjack, slot machines, all of the fun stuff, right? So yet they are still making money. That's the point with trading. You could call it gambling, but the point is, and the objective is, for you to become the casino, right? Over a bigger echelon of trades, you end up making profits. That's the point. Cool. We are now having the strong pullback beginning to happen. Strong liquidity grab potentially, and we are simply waiting, right? Simply waiting. Cool. Rise has been shiny. Keep on striving for greatness, brother, because you are meant for it and absolutely nothing less. Let's